1621. Yes, it's a Sunday before the market opens tomorrow. This is the triple Qs, QQQs. They all have one thing in common. What I would like to tell you is that this is a 4 hourly chart. So each candlestick is 4 hours in price. Okay. And it gives you a really good shot because when you start looking at where the daily was, which I'll show you right here, they all have one thing in common, and it's the following. They started with the gap above the 50, 100 is right there, the red line. So you went right through it, and you started with the gap open up Friday. Memorial weekend, a lot of stocks have been beaten down. We've had a 2-day recovery. Is this going to be what we call a head fake? Or do we pull back and consolidate? There's lots of things to take into consideration, but here's the main one. The sell signal is -2. So it was minus 2.6. So minus 2.0 is definitely how you gauge the beginning of an oversold condition, oversold bounce. Those are the terms that people use. So nonetheless, we did clear the moving averages on the daily. So we can see that. And then we can see the conviction here, breakout prices. There it is. It started with this 4 hourly bar. That was the low. Bam. Straight right up. And no one was going to stop the breakout bars and how they propelled right on up. And that they did. So, once again, all of them have a relative pattern that is the same. And when you look at the performance on 513, then you look at the performance here on 514, and on this hourly chart, you can see how the bars were closing on top of the previous highs. So those lows on top of the previous body of the price high. And up we went, and we did. And one of the things that we would encourage you is to take that free 5-day trial. It's going to be another wild week. Inflation blew a hole right through this market. That hasn't come off the table. The rotation trade out of this idea about rotating out of tech, well, I can tell you that Amazon was up 66, Google was up 58, Shopee was up 38, Meli, M-E-L-I, was up 29. So there was CMG plus 33, okay? And so all of them had that percent level of movement from an oversold calculation. So these are going to be the half bars where I have these trend lines right here. That will be support if there is a reversal, and I'll be updating everyone else. But trading the triple Qs, and then in the option pit, because that's what you want to know, is what is that like, and what does this QQQ option on the call side look like? You can see the volume, 8.6 thousand shares. These are big blocks. There's a 17,000 block that was there. They go like in increments of days. 3 days out on the 19th. You can go to the 21 is 5 days out. That's a monthly, right? I believe. So May 24th, and then you can see where all the volume is in the shorter time frame, and the blocks get bigger. Okay, the shorter the time frame, What it tells us is people are expecting a move to happen. And in one day, they're expecting a breakout because you can see the volume here on a 328 call, 8,500. They had 17,900 share block at the 330 call on this. And we did break out, and it would only take another breakout and continue this rally to get the 330s in the money, but so 17,900. And then you have yeah. So these are the biggest blocks of that volume for one day. They have that this has to break out, and it does. And it has to break above the 330 strike price, where it's 17,900 contracts. That's the biggest block. So we have an 8,500 block at the 28, and then at the 325 there was an 8,600 block. So now we know a little bit about that picture, and we also know there was some big blocks over here. There was an 18,000 volume block on, and that's a hedge. I can tell you that's a 325 put below that 330 call, 17,900 there, and you have 18,000 share block of the 325 puts. So you do have big blocks over here on the put side. The 320 had a 9,800 block. And let's see, yeah, 10,900 block there on the 326. It's going right across here. So we can see where the mindset of the market is, along with the technicals. So we just witnessed how many on a 2-day movement, one is classified a gap. And when you have one that is classified a gap, and this is the perfect example here on Friday, and what 4-hourly breakout it was. And they generally either keep going or they pull back to support levels, and that's going to be the previous half bar in price. The top half of the price is your support. Same thing here and whatnot, and what's going to move the option market around. So once again, triple Qs on how to trade them. It's not every single day that you get that strong of a rally on 4-hourly candles straight up to the peak. Good luck for the new trading week. Take the free trial. Live market hours. Click on the link and then fill out the form, and the phone number is 702-685-0772.